Really appreciate you. Well, although first quarter gross domestic product sees a growth of 3.2%, economists express concern over lagging consumer spending. Joining us now for today's Market Intel Report is President of Agricultural Prospects, Dr. Bob Young. Thanks so much for joining us, Dr. Young. How worried do you think we should be about this slowdown in consumer spending? Clearly, they're saving more than they're spending.
Well, I don't know that I go quite that far, but they're not spending quite at the rate that they have been, or the growth in the spending had been quite at the rate that we've seen over the course of about the last year or so. Really, you've got to go back. We did have one quarter in there back about the first quarter last year where consumer spending dropped off quite a bit, or didn't grow as fast, I guess is maybe the right way to say that, as it did this quarter. But you've got to go back a long way to see the kind of this long-term, almost a 12-month long period now where consumer spending has just been, yes, it's growing, but the rate of that growth is just continuing to back down and back down and back down. So, if we continue on this pace, then we would talk about actually seeing consumer spending actually reduce if we get out to third or fourth quarter or so of this year.
Well, it's interesting. The economy has been improving. We've also seen a rise in the stock market. Talk about how can inventories rising be a two-edged sword when it comes to the GDP?
Well, as inventories increase, that counts as a plus for GDP growth because, the economy's producing that stuff and it's ending up someplace. But on the downside, that stuff is ending up on the shelves. It's sitting there waiting for it's stuff that we're not going to have to make in the future because it is in reserves, it is in stocks. And so the downside is that if you get a positive number this quarter on inventory growth, that's really going to mean that you don't have to produce that stuff next quarter. And so, as I say, it does end up being kind of a two-edged sword when it gets right down to it.
What do you think that these trade numbers tell us about how the American economy is moving right now?
Well, I think what they're really reflecting is, what's going on the tariff front as much as anything else. If we have a decline in imports, for example, that shows up as a positive for our GDP calculations. But what that really says is that we're not buying as much stuff. The economy's maybe not quite as active as you would like it to be. And so we actually had about a $30 billion decline in imports in the first quarter of 2019, which again, just says that we're just not moving quite as rapidly as one would like us to be. The other thing that you might put that down to is that we had a kind of a surge in imports fourth quarter 2018, or third quarter, I should say, third quarter 18, as we were kind of anticipating those tariff applications. And, now we're kind of on the backside of that addition, that early buy-up.
All right. We always appreciate your insight. You're a very smart man. President of Agricultural Prospects, Dr.